joining us is Ed Francisco, the president of BDO Capital and Investment Corp. Good seeing you again, Ed. Welcome back to the program.
Good morning.
Yeah, so forecast downgrades at the start of the market trading. ADB upgrading the Asia and Pacific outlook, but cuts the Philippine growth outlook. And that's just after the World Bank cut as well for this year and next. What do you make of these?
I guess it was expected anyway. We were having a hard time reaching our targets, and the floodgate scandal really dampened consumer behavior, of course, and then we'll see lower, as mentioned, lower investment. So people will be afraid, and then even the government authorities will be afraid to sign and disburse because they'll for fear of reprisal or because people are double checking what's happening.
What is not happening, Ed? I mean, the government's already promised that heads will roll before Christmas and arrests are being made.
No, that's a good point, Kathy. I agree. In fact, the rumors I heard was before the big rally a couple of Sundays ago, there 2 or 3 big fish would be jailed, but that hasn't happened yet. So I think that has to happen because from the layman's perspective, it's just all the small fries that are being caught. So we want to see the seriousness of the government. It also didn't do well when Babe Singson resigned, right? And then there's this clamor from the private sector to have a permanent ICI with more teeth rather than just being recommendatory. So we'll see. And this is just coming all about because people want to see actual action and rather than all talk. So that is really the cause for all this concern.
So given all that political noise and knowing that in 24 hours we get the Fed and the Bangko Sentral to decide on rates, what do you make of the peso's renewed fall to a fresh all-time low?
Yeah, we really are vulnerable from a peso perspective, but I also support the possible rate cut. I think it will because we need it to support also the SMEs because they need that jolt. So the rate cut will help them. Temporarily, you're right, the peso might get hit. I hope we don't reach 60 because we are always kidding that we don't want to be a senior citizen in terms of our peso dollar, right?
Okay, well, I'm thinking of the OFWs though, Ed. I mean, what's bad about 60 anyway? I mean, there is that other side of the narrative there.
Yeah, true. It's be good for them. And then also on the other hand, right, since our exports are not that much anyway, right? So bringing it to 60 might even help. So there are pros and cons, you're right. But it would mean the better Christmas for the OFW and the remittances as they come because of our loyal kababayans who send money to their families. There'll be more to celebrate with.
Yeah, but not if we consider the Bangko Central's sentiments. I mean, the timing is critical as the Fed and the BSP are deciding on interest rates in 24 hours. In what way might the peso's record weakness constrain the Monetary Board from cutting by 25 as expected?
Correct. The nice thing about this is because of the time difference. The BSP Monetary Board will know already the decision of the Fed, right? So I'm sure all the excellent professionals there are mulling it over even as we speak. But then on one hand, because of the weakness, and then in fact one statistic that I was surprised to discover myself, share with you, Kathy, is that you in the past in the PSE around majority or 60% of the total daily trades were foreign. And then a few years back, it went down to 50%, which in a way was showing the strength of the Philippine investors. During a recent board meeting we had internally, it's already down to 40%, the foreign, because they've been leaving, frankly. So it's not a good sign. In a way, you can look at it half glass, half full, more locals, but on the other hand, also because the foreign are not there. So in a way, maybe lower interest rates, if they spur more consumer demand and faith in the government by other actions, will really help because we need that. It's more the confidence right now, confidence in what the government is doing, our managers, and then the private sector are doing their job. But then if foreign investors are always questioning the moves here and questioning our credibility, it's really hard to move.
Well, exactly. I mean, confidence is missing right now, which leads us to asking about the company's health. I mean, are companies still servicing debt? Are they managing costs? Are they even hiring, even as market and consumer confidence have been shaken?
Yeah. Now, at least from the corporate side, I'm happy to note that, at least from the banking side, NPLs are stable, right? Uh, we have a great banking system. Corporate delinquencies are not increasing. It's managed. So it shows you also that our Filipino corporates, large and small, have been managing their wallets very well. Maybe, in fact, to the point, because when they were perceiving the slowdown or all this anxiety, instead of overspending, they reduce their spending. That's why their debts are also manageable, which is good, right? But then on the other hand, because if we want to really grow and they've curtailed their spending, it will also the upside is also more limited.
Exactly.
So in a way,
and we're heading
yeah,
into 2026, Ed. So if they don't put
yeah,
out the capex, and that's going to be pretty bad,
correct.
isn't it? I mean, it's not going to be the classic balance sheet or earnings crisis, hopefully, that we're not facing head on heading into the new year.
Right. And I totally agree. I mean, the government really, in a way, was the culprit because the private sector was doing their job. We were seeing loan growth, strong loan growth in the first half, right? And then it's been slowing down. And then with the mess that we're in, we've actually shot ourselves in the foot. And now, even the loyal corporates, the loyal consumers, the loyal SMEs who were building already their inventories are starting to slow down because they're questioning or will grow. And that's why, from my perspective, I want to see some big fish, really put to jail because that will put faith back in the government and hopefully bring investors in and maybe tell the consumers, the Filipinos, to start shopping again because there's some light at the end of the tunnel, Kathy.
Any light at the end of the tunnel for 2026 in terms of a return to equity issuance?
Yeah, return to equity, but not just even the equity issuance, because I guess 26 we're working on some deals, but for me anyway, the key also is confidence and the loan growth. So as long as we see loan growth and of course the classic GDP numbers is C plus G plus I, right? But government spending will be muted. But at least if the consumer spending and investments are improved, that will compensate for the weaker government expenditures. So
So
I'm
if,
really hoping that consumer, yeah.
okay, if not equity issuances, then which instruments do you now see dominating
Ah,
the deal flow for now? Is it straight corporate bonds, project finance, perpetual prefs, private
okay.
placements?
Project finance will continue to be strong. We continue to do a lot of them. In fact, we just closed some two large deals for renewable hydro for the Razon Group, right? And then, of course, we also closed some big bond deals for San Miguel, for SM, and then even for Metro Pacific Tollways. Those always do well. So project finance, syndicated loans, we'll have more bonds also. It's just the equities that are not doing so well, but at least the other capital raising instruments do well. And then investors who are able to invest in them are pretty happy because the yields are pretty good, Kathy.
So it's still the boring stuff, really. It's not back to the
less
equity
less
issuances.
risky.
Okay,
Correct,
but
correct.
what is your realistic base case then now over the market over, say, the next 12 months as we're seeing growth downgrades coming from the multilateral institutions?
Yeah. In what sense, Kathy? The PSE index or
That's
the
correct.
GDP? Yeah, PSE index. Yeah, you're right. Because 7,000, you just throw that out already because that's very challenging, right? Uh, if we can go back to 6,000 or 6,1 by year end, that would be great if there's some positive news. And then realistically, because of a lower GDP growth, there's a multiplier effect of around 1.5, 1.6 times PSE to GDP. So maybe if you get an 8% GDP uptick from 6,000 year end, what's that? That's six times. That's only 6.5. So and we were already past that. So it's sad, but if we make 6.5 next year, that's just consistent with your GDP growth will be. But hopefully, there's also a lot of upside because of sentiment. If some changes happen, if some governance council happens, and BBM and his policymakers come up with some great changes, and this anti-dynasty law, for example, gets into effect, or these other priority bills, then that's more sentiment driven, but that could bring the market back to 6, 8, 7,000.
Well,
So
it's
I'm
quite
keeping my
encouraging,
fingers
Ed. I mean,
crossed.
we're just seeing an uptick here of about 0.25% in the first few minutes of trading. 59.90. we're trying to breach 6,000 again.
6,000.
Even
No, I
after the
hope so.
downgrades. And yeah, you hope so. I mean,
Correct.
hope so that it stays that higher
Yeah.
for long. But what do you make of it? The reaction in the market's pretty muted, even as we got
Yeah.
some bad news at the start of the trading day.
Yeah, in a way, right? You see, I guess it's factored in already. So whatever happens tomorrow with the rate cuts of the Fed and the Monetary Board will already be, I guess it's already factored in. At the moment, the corporates are really looking at more sentiment driven. They are also gauging consumer appetite, consumer sentiment. Because at the flip of the switch, right, if the consumer suddenly become optimistic, even the capex budgets will suddenly be revived. I think that's how it will go because it's a pendulum that can swing either way. Either we're just so disappointed, we just keep our monies. But then if we're all buoyant and we see there's something positive here, then people will have a Merry Christmas and spend, and then that will continue for the rest of the year, and hopefully, as you're right, I think last year we were talking about 6% growth already for 26, 27. Now it's muted, but we could still go back on track. Of course, not that high, but there's a chance if it's really sentiment from locals and even from the foreign. If that changes, it can swing immediately.
Okay, we got about a minute to go. What top two policy or execution gaps do you want to see for 2026 to restore investor and consumer confidence?
Okay. No, I think a lot of people were surprised when the president asked some of these new bills to be priorities, right? Because from the economic side, they're already happening. But this anti-dynasty law bill was surprising. If that's pushed through and that happens, that really shows how serious the government is. And also, even if it's not the bill, as long as they jail, some senior government officials to show that they're serious, right? If the ombudsman is able to do that, because they're saying it's out of the ICI's perspective, right? Or if something happens with the ICC, I think those are positive news that we're waiting for.
All right, well, hope floats as we detail the silver linings there. Thank you so much, Ed Francisco, BDO Capital Investment Corp. Happy holidays.
Thank you.